What is up, tubers? Joey here with you today. Going to talk a little bit about why the back testing that you see online, it looks so easy, but actually when it comes to real world trading, it just doesn't work. And there are a few reasons for that. Number one is, let's just bring up, for example, we're going to use just a standard MACD above the 200 moving average. The 200 moving average is the blue, the large blue, and the MACD. The standard most popular way to utilize the MACD strategy is to have a MACD crossing below the zero line. This is the zero line here, and to have the close or the candles above the 200 moving average. So let's scroll back here and just take a look here and see if we can find a crossing underneath the zero line. And here we have one right here. We have a cross below the zero line, and the next part of it is the close or the candle, the close of the candle above the 200 EMA, the moving average exponential, and it is. So there is our signal. And then what we do is we wait for this candle to start forming, and we enter the trade at this point. So at this point, if we enter the trade, I'm just going to put, let me show you what tool this is. I'm just pushing the scroll mouse button on my scroll mouse button, and I am just using the trend line. So if we go here, and we're using a 2-to-1 ratio, in this case 2% win, 1% loss ratio. Let's see how we would have done. And the candle starts there. That would be our entry point. And we are going to go to the highest part of the candle, and it looks like we're at 1.98 here. We're going to continue to go, and right there we're at 2.2. So this would have been a winning trade. The other way I take a look at it is, let's say we had some candles that were moving down. I kind of bring it down to around the 1% since I had to kind of stretch it out. You can see the 1% is way down here, so we weren't in any danger of losing out on this trade. So it looks easy enough. That is a simple strategy. The MACD crossover below the zero line. Let me push the button again here. MACD crossover below the zero line, and entry on the first candle after the crossover, which would be right here, in this case here, and that would be our entry point. And we are doing a 2-to-1 win ratio, 2% gain or 1% loss. And so it looks simple enough. Now the first part that is kind of a misnomer as we look at the MACD in itself and strategies in itself that you can see online. There's a lot of traders online that do the back testing, and back testing is very important, obviously, because you want to make sure strategy works. But the first issue that we have is, how are we going to enter right at this point? You know, unless you have time off during the day and you're a full-time trader and you're sitting and waiting for this to happen, you see it starting to form, and then you boom, enter right away. That's the first problem. You know, I don't know about you all, but I'm working a full-time job during the day. Luckily, I'm working from home, and my work computer is right next door here, so I can jump in and out here periodically. But I just don't have the time to look and watch charts and make sure. So that's the first part of it. The other part is you want to make sure that, you know, when we're back testing, a lot of times the back testers are just using different types of markets. So in this case, this market looks like it's on an upswing. If we look at another, let's see if we can find one below here. So usually you want to use the 200 EMA kind of to see how a market is moving, if there's a trend. Here we can kind of see there's a trend, but I'm only on the 5-minute chart. Let's go back to the 180-day 4-hour chart, and this will give us a more wider picture to kind of see what kind of trend, and we just kind of follow the 200 EMA moving average to see what kind of trend. So there was a little bit of a trend up, kind of stabilized. It was kind of going down. So I wouldn't necessarily say this is a strong trend up. It looks like it might be heading up. So this might be, you know, if you want to back test and trade how you are actually going to trade. So if you're going to look at this and just trade strictly on being above the 200 EMA, you know, by all means, take a look, make sure that we're looking at some sort of trend here. There's a little bit of a trend starting here, and go ahead and use the back testing. Now let's see if we can find one below the 200 EMA that's not trending as strong. Now this one's kind of flat, and you can kind of see here, this is probably one that you don't want to necessarily trade on. It's flat. You know, there's still some winners in here. I'm not going to say there's not winners in here, but again, as we look at trading and you know, strategies, we want to look at the strategies that give us the best chance for winning, to gain our 2-to-1 ratio in the example that I gave, 2-to-1 ratio. So this probably isn't going to give you as good of a chance. So you really want to kind of take a look, and this one's very flat here as well. So one of the things that I do is I just strictly look at volume, and I have a scan for volume, and it just runs all day over here in my watch list and continually updates. I'm only looking for 1 million or more per day volume. And that's kind of where I start. Then what I like to do is look at the 180 day. So that's two of the main issues is if you are back testing and you're doing it in different markets, you know, like a flat market here, or a stock that's on an upswing or a stock that's on the downswing. Now, if you're going to trade that way, then, you know, you're going to get an accurate back test. If you plan on trading just on being above the 200 EMA only, and then it doesn't necessarily matter if you're looking at a flat one. Now, if you're going to be trading on just stocks that are on the upswing, that's what you want to back test on. So that's part of the back testing, and that's part of the problem with back testing that we are seeing online is folks back test, and then it just doesn't work when we try to, you know, do it in live trading markets, because you may be using, you know, looking at a market like this that's not necessarily on an upswing, that's flat. Your chances are going to be a little bit less. So I would recommend that you get into a chart that is definitely on an upswing where you see the 200 EMA. Let's see if we can find one here. See, this is me doing it live where I don't have one set up. Okay, here's a nice upswing right here. So you can kind of see how there's a nice trend here. So this would be a good one to trade, to put onto your list for daily trading, to look for those opportunities. In this case, we are talking about the 5-minute the 5-minute chart with the MACD. And here you can see it's below the 200, so we don't want to take this trade. So you only want to take the trades that are above the 200 EMA. So that's the first part of it. Now in my next video, I am going to talk about, okay, how in a live trading market can we jump into some of these opportunities. So stay tuned for that. That'll be my next video, and we hope to see you all again here soon, tubers. Thank you.